Top of the morning to you traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, March 29th. It is 7:13 as I'm starting the video. Quick look at futures. Not a lot going on. ES futures down 0.3%. NQ, NASDAQ is flat, and small caps are down about 0.5%. Before I get into it today, I want to say thanks for you guys cutting me some slack on Friday to do a few things outside the charts. I really appreciate that. Also, this week we've got a holiday shortened week. We've got Good Friday, holiday celebrating Easter on Friday. Please be aware of that, as if you have option positions that may be set to expire at the end of the week, that'll all happen on Thursday instead of Friday. We've got the March jobs report, which I believe comes out on Thursday. I'll have to check that. But also Europe shuts down on Wednesday. So Europe will be shut down Wednesday, Thursday, and Friday for an extended holiday week. So from that perspective, it may be slow trading towards the end of the week as global markets take a step back, or at least some big markets take a step back for the Easter holiday. So don't get don't get out over your skis, or forget about positions on Thursday afternoon, because we will be closed on Friday. Okay, today we're gonna go through the regular stuff rather quickly, SPY and the FATMAAN names, and then I want to spend a little time on some sector rotation charts that I think you're gonna find really, really interesting. So SPY 2 hour, we came down and dipped to tag the 50 last week. Remember, the 200 EMA on a 2 hour chart is the same line as the 50 EMA on a daily chart. So this is my proxy for the 50. We came down and tagged it, got a nice bounce. This was Thursday, this was Friday. So essentially right back up to the highs. We took out this breakdown candle, which we had been watching for a while. So, I mean, on the face of it, nothing to say, but, a great 2-day push that looks bullish. We've got a bull cross here. We've got an RSI breakout there. Moving on to the SPY 30-minute chart, you can see we've got one last layer of resistance here at these prior highs, right around 397. If we can take that out, then it looks like new highs to me, which is what it would be. And then, at that point, we're probably so close, go on up and touch 400 or 4,000 on SPX. But if it runs into trouble here, we could see a pullback into 394. That's really the next layer of support below. So, active traders, if you see price stalling here at close to 397, that's your objective short. Short resistance, buy support. So you could take your tactical short with a stop just above, and then hope for that pullback into 394. And if you've been reading, Seeking Alpha and Barron's and Wall Street Journal and all that stuff, there were some, I'm not going to say shenanigans, but stuff going on. There was a big hedge fund liquidation on Friday. That accompanied some other, more or less technical buying. So, a big green bar is a big green bar, but there was some stuff going on behind the scenes that may have, caused this, other than everybody simply deciding to get bullish on a Friday afternoon. So let's just watch it. Looks bullish, especially if you can get that breakout at 397. But those are your key levels. When you look at QQQ, it's a much different chart. We're nowhere, close to the prior highs. we've been chopping in a wide range, going all the way down to 297, coming back up to 324 in quick order, but then backing away, working our way down, series of lower highs, lower lows. We've got the Fibonacci dropped in here. We've got the 200 EMA, which again is the 50 EMA on the daily chart. So this morning I called it QQQ, war at the 50. This has been a battleground for several weeks, going back into February. We've crossed through that 50 several times, but even with the big move on Friday, that just brought us back up to the 50 to tag it from below. And you can see the fibs here. That's a 618 retracement off of this down move, typical and what you'd expect to see. So again, we're at a decision point on the Qs. Can it power above this 316, get up into the 318.50, 319, make another push to 321, and then ultimately come back up to 324, which is the much more significant resistance zone where you can see there was a lot of trouble in the past. So I've got the overhead resistances shaded in. I think today on a break above 316, you can be long with a stop below and just see how far it can push. Now on the 30-minute chart, you see a lot more clearly that big closing bar into 316 on Friday. We do have this downtrend resistance that caused a significant problem back here earlier last week, where prices fell away and now have bounced. I would expect this downtrend line to have a little bit of resistance here at depending on when it intersects between 317.50 and 318. If you got a breakout there, I think you could get a pretty quick run up to 321. So I think that's an important level. If price gets stoned right here at 316, I think that's an objective short where you could get a pullback into 314 or possibly even 312, depending on, how much selling takes place. So, but I mean, the levels have been working great. 314 here is a nice level. 312 and 310 have been nice levels. So if you catch those reversals right, I mean, there's a lot of money to be made. So focus on your levels. IWM, series of lower highs and lower lows. Now we've got a fib retrace. So here's the top, here's the bottom, fib retrace. We're right at the halfback short entry zone. And you can see here on Friday, notice how the charts look different than on SPY and QQQ. Here, we spent the whole day tagging this 221, 220.75 area. We had 4 touches. So that's 8 hours where price could not get above that 50% halfback top of the range. And so now this morning we're down about 0.5%. So we've backed off that and are coming back. Keep these levels handy. They're great to trade off of. If you get a push back up into 220.75, 221 where it stalls, I think that's a really objective level to try a short, to have it come back into here, into 218, and possibly even make a run down into 212. That may not all happen today. But what I'm saying is there's obviously something significant here at 221 where, you know, this was resistance back here, finally popped out, came back down, resistance, a lot of resistance here. I would want to make price prove that it could break out above 221, and if it did, that would be a great long, because then you've got an open door to 224, possibly 226. So I see that 220.75 to 221 as being really important in IWM, and you can see it right here on the 30-minute chart where, you know, it spent the whole day trying to get above and not being able to do that. But look at the range. I mean, you know, here was a rejection at that level, and it came all the way back to 216. That's $4. And I can tell you from experience and watching it on Friday, that was a fast move. So if you get your, you know, if you can get in at the top and bottom of ranges with tight stops, you can have some really, really productive trades. So before we get into the FATMAAN names, if you're new here, please hit the subscribe button and the bell. You'll get all my content. I work really hard at giving you key levels that are actionable, where you can really work on your execution in real time during the day and have a lot of confidence in the levels that I call out, instead of diluting your time with you know, a ton of technical analysis. Now, if that's your thing, knock yourself out. You can use my levels to complement your work. Nothing wrong with that at all. Longtime subscribers, hit the like button, leave me a comment, leave me some ideas for future content that I can do. I'd be happy to do that for you. And as always, check over in the show notes for links to both the blog site, where you can get additional articles and information on trading, trade school tips and tricks, trading psychology, should help you in your trading, and also a place to register for all my content, where you'll get everything in an email each and every time I send out information. You won't miss a beat. So thank you for listening. So let's move along here. Quickly, Facebook, back on the daily chart, we had called out 280 as a very important level. You don't want to see price go back in to this prior trading range. Otherwise, the target is the bottom of the box. Did a nice job coming back in, tagging, even undercutting that level before closing above. So right now, the technical posture is you can be long against 280. And if the market holds it together and gets bullish, you can get a run back up here to 295, 296. Apple remains in the dead money zone. It's, you know, oscillating. You can make a little money here and there, but it really has been a tougher trade. You know, certainly no trend trades. This is all intraday active trader stuff. Came down here, again, made a run at the top of this open gap, managed to hold it here, and then bounce a couple dollars into the close. Today, as long as it holds 120.50, the door is open to 123. If it loses it, probably going to come back in here to the gap and test it yet again. Tesla has been under some real selling pressure. It was down 3% on Friday, down below this 650 daily pivot area. I really think to get back on track, Tesla has to recapture 650 and then start grinding through these declining overhead EMAs. I think it's going to be a tough slog. This PPO momentum profile is super duper weak, and so is RSI. At least as it stands now, those indicators are favoring lower. Price is favoring lower as long as it stays below 650. And if that is the case, then your next target is a tag of the 200 down here at 530. Here it is on the 60-minute chart. Came up, lost it, undercut the low, had a nice final bar. But until, on this time frame, it's got to recapture 630, then it's got to recapture 640, then it's got to recapture 650 and 670. So there's a lot of work to do on Tesla, and it certainly has a downward flavor to it right now. Microsoft, a lot of chop. We've been using this 235 as the key pivot. You can see here with this uptrend line that we had, test that held, test that held. I think bulls are okay above 235. I don't think you can buy it here this morning. I haven't looked in the pre-market, but let's just say it's 236, 237, right in the middle of no man's land. I think you've got to wait for an objective location, either at 238 or back at 235. Above 238, you can take it long for another run at 244. If it stalls there, I think it comes back to 235. And of course, if it pulls back to 235, that would be an area where you could get long. And 233 is an area where you can get long as well against this uptrend line. Amazon has been more or less oscillating. If you're nimble, the 350 Club delivered on Friday. You had a move from 350 down to 3,000 to tag the top of the gap. That was your $50 move. And that might have been a pretty nice trade on Lottery Friday, depending on when you caught it. But then you had a monster closing bar that brought it right back up to 30.50. So again, 30.50 is your pivot. Above, you can look for 3,100. Below, you can look for 3,000. Continue to use those $50 increments. They have been working like a charm. Google, mostly a nothing burger on Friday, up 0.38%. Just here, notice the price action of, losing this level, 2040, right down to the bottom of the box, fake breakdown, come to tag this 1995 that has been tagged multiple times before, got a bounce, reclaim 2010, right back up to the top of the box, rejection, right back down to the bottom of the box, nice closing bar. So now we're at the midpoint. So I know it's more difficult than that, but you can see that there are price action cycles that happen all the time, and it's not just in Google. If you look back here or in other charts, when you've got these trading ranges, price tests the low end of the range, recaptures that low end, and then goes up to the higher end of the box, and then it explores, gets rejected, and then goes back down to the bottom. So, if you're actively trading that on a short time frame, it doesn't seem like a lot, but 240 to 210 is $30 in a few hours. That ain't a bad thing. That's not a bad trade. Netflix has moved into this prior gap, made a run to fill it, but fell a little bit short, and then popped outside the box on Friday. So I think today, as long as it holds 505, you're fine. If you're a bull, you can be long and look for 517. If it retreats and falls back inside, then I think it's a short and you're looking for a complete gap fill down to 495. Now let's quickly go on to some other charts. Since we're all bond traders now, I want to keep an eye on TLT. We had been following this along since this big breakdown of this triangle. A lot of us were short for this fast leg down, which was great. We had a consolidation. We had a fake breakdown, which was a bear trap. Most of us covered, in here. And then there was a little squeeze up to the falling 20 EMA. And we had identified that level last week as important heading into those 5-year and 7-year auctions. And you can see not only the falling EMA, but you had this prior trading range. And we said if price can take out the 20 EMA in blue, the target would be 141. Well, there was a pretty swift rejection there on Thursday that brought price back down to 137, and then there was some more selling on Friday, not a lot, but a little bit lower. So now I think there's two levels you need to watch very carefully. 135.5. If price breaks below 135.5, I think we go down and double check the low down at 133. If 135.5 holds, we could bounce back up to 138. And if 138 gets taken out, we go back up to 141. So I'm not suggesting that you necessarily have to or should, actively trade TLT. But as we know, the rates and the rate outlook is filtering its way into equities. So at the very least, watch bonds. A falling bond price means yields are rising. It's an inverse relationship. And when TLT is rising, then bond rates are falling. So, but TLT is at an interesting spot here. We knew it couldn't go down forever. We got that bear trap and then that little reflex bounce, but that was stoned at technical and EMA resistance. So now we're at an interesting spot here, just above support and below resistance. Now, I wanted to show you some interesting sector rotation charts. This is the low volatility ETF, SPLV. SPLV. You can probably see it here. I don't have them all marked up, but the point I'm trying to make should be pretty evident. Big breakout on Friday. Big breakout. So, nothing, pull back. Big breakout. Let's look at consumer staples. Another defensive group. Taking out the highs with a monster breakout. Your Procter & Gamble's, your Clorox, your Kimberly-Clark, your, all that stuff. All your food stocks that we had talked about. Smucker's, Hershey, all the food stocks, all the defensive names with good yields. what you call, quote, safe stocks. They had a big candle on Friday. And aside from the size of the candle, taking out the prior range and breaking out. So now, like on this chart, for example, as long as it holds 67 on a possible back test, that breakout will hold and, from a technical standpoint, bodes well for a further advance. Let's look at Reits. Same chart. Defensive sector going into launch mode, taking out the prior highs. Blue sky has some running room. So low volatility, defensive names, consumer staples, defensive sector, REITs. Let's look at materials. This is more or less the reopening trade, right? Raw materials. This has your copper, your Freeport, Southern Copper, all your specialty chemical names, your fertilizer names, your paint names, all that stuff breaking out. So that would be encompassed in the reopening trade. Nice little breakout there. And then finally, let's wrap up with utilities, probably the most defensive sector that is out there. You can imagine me drawing a resistance line right across the top here at 63.5. I think if you get a breakout there, you go right back up to this 66.5 prior high, where there would be a test. That's what I'm trying to say. Test of the prior highs. So here's what I think is going on. Technology in general, probably more focused in the bubble stocks. That distribution, that sell-off is continuing. If you look at the charts, even of the FANGs, but if you go, the ARC funds, the Cathie Wood funds, the bubble names, the Zooms and the Pelotons and the, all that stuff like that, all those real high valuation names, they have not bounced like a lot of the other names have. I think those are still under pressure. I still think they're going to be under pressure. Where's the money going? It's going into defensive stuff. It's going into reopening stuff. It's going into staples, utilities, materials, low volatility stuff. And so I think that rotation has been happening, and it's all been happening under the surface, where these micro bubbles, we can talk about, the stock market, the global stock market's in a bubble. Well, a stock market is comprised of its component parts, and not everything in the stock market is in a bubble. But the bubble stocks have been in a bubble, and the air's being let out of those. And so systematically, the air has been being let out of some of these, EVs, batteries, all that high flying stuff. The air is being let out, and people are rotating back into conservative names where there's less risk. If you were to look at a ratio chart between high beta and low volatility, you'll see where that ratio is starting to turn down, because you've got high beta as a numerator and low volatility as a denominator, and the low volatility are increasing and the high beta are decreasing. So that ratio is turning down, and that downturn in that ratio is indicative of a rotation into safety. So keep that in mind as you're trying to figure out what's going on today, and in the market in general. We'll watch it, and I will do my best to sort through and sift some names that we can get some objective trades going in those areas, if that's something that you want to do. But still, very choppy, treacherous environment. Just when you think you got something going on a swing trade, 2 days later they pull the rug on that sector. Can be really, really frustrating, especially if you like to use tight stops. So, if you're confused, if you're frustrated, do less. Do less. You can't get in trouble doing less. So let's leave it there. I hope you guys have a good day of trading today. Get off to a good week. Remember, we got a short week ahead of us. Some of you may be making some plans to do some things outside the charts this Easter weekend. That would be great. Might be a week to not try to do too much. And one thing before I close, I almost forgot. Quarter end rebalancing into Wednesday. This is where all the hedge funds gotta realign all their stuff, all their holdings, and so there could be some dramatic shifts. That said, we've had times before where every rebalancing is the biggest in 10 years and then nothing happens. But you kind of got to be ready for something to happen. It's the boy who cried wolf. It never works until there is, until it does. So let's be aware that there's a big quarterly rebalancing into Wednesday, and that there could be some added vol as a result of that. Okay, let's wrap it up here at the 32-minute mark. It's 7:45. Have a good day of trading, and I'll talk to you next time. This has been Chris Buss with Traders Profit Compass. See you later.